Hello, fellow investors. Last week, U.S. politics brought fundamental changes to the crypto market. The advancement of three key bills has cleared the biggest obstacle to the entry of trillion-level institutional capital: regulatory uncertainty. This heralds the arrival of a new era. These three bills together constitute the three pillars of U.S. crypto regulation. The Genius Act, signed into law by the President, it establishes a unified federal standard for the issuance and reserve of stablecoins. The Clarity Act, passed by the House of Representatives, it aims to clearly define the regulatory scope of the U.S. Securities and Exchange Commission, SEC, and the Commodity Futures Trading Commission, CFTC. The Anti-CBDC Act, also passed by the House of Representatives, it shows that the United States supports a private, decentralized financial future rather than a state-led digital currency. This series of legislation has injected unprecedented certainty into the market, and its impact has quickly spread to the entire crypto market. The story of Bitcoin is becoming richer and richer. It has become the core of corporate finance, national strategy, and even personal financial planning. Bitcoin Whale Strategy has once again spent about $740 million to increase its holdings by 6,220 bitcoins, bringing its total reserves to a staggering 607,770. More notably, the company has launched a new preferred stock, STRC, which offers an annualized dividend of up to 9%, aiming to attract capital from traditional money market funds, which currently have a yield of only about 4.25% and a scale of $7 trillion. This marks a new stage in institutional adoption of Bitcoin, no longer just buying, but creating complex financial instruments to actively siphon funds from the old financial system. However, analysts warn that strategy's model is extremely risky for imitators. Its success depends on the company's stock price being far higher than its Bitcoin net asset value, so that it can effectively issue new shares for financing. For companies that do not have the same confidence in the market, once the stock price premium disappears, this strategy will fail and may harm shareholder interests. In sharp contrast to strategy's aggressive accumulation, the British government is considering selling more than £5 billion, about $6.7 billion worth of Bitcoin it has confiscated to fill the fiscal deficit. The assets were mainly seized from a Chinese Ponzi scheme in 2018. This move was likened by many experts to the Brown's Bottom event in the UK's history of selling gold at a low point in gold prices, highlighting the huge strategic differences in the world on the issue of Bitcoin as a reserve asset. Finally, I would like to share an interesting analysis. Based on the assumption of money supply growth, by 2035, it is possible to retire with less than 1 Bitcoin in many countries in the world. This story reminds us that Bitcoin is a potential tool for ordinary people to achieve long-term financial sovereignty. Let's take a look at Ethereum. Ethereum is staging a strong capital-driven revival. Last week, ETH-related investment products attracted a record $2.12 billion in inflows, almost the same size as Bitcoin, which is unprecedented. This is a sign that institutional investors are considering Ethereum as a core asset as important as Bitcoin, rather than just digital oil. This is also confirmed by on-chain data, with its total locked value, TVL, increasing by 61% in the past 3 months. At the same time, the Ethereum ecosystem is also showing vitality. The community celebrated its 10th anniversary by passing the Torch NFT, and developers are planning the next major upgrade, the Fusaka hard fork, in November 2025 to improve network performance and prepare for future institutional needs. Based on the current amazing rise in Ethereum, as an investor, you should be cautious. If the practical value gives Ethereum a high valuation, but we know that Ethereum is not a new thing, then we have to ask what factors make Ethereum get this high valuation. Is it hardcore technology or fierce emotions? Where is this valuation more reasonable? Finally, let's talk about altcoins. While Bitcoin and Ethereum attract most of the attention, the altcoin market is playing a song of ice and fire, and the market has shown obvious differentiation. Ecosystems such as Ethereum, Sway and Hyperliquid have achieved synergistic growth in price, on-chain capital and activity, showing a healthy growth model. In contrast, although Solana and BSC have risen in price, there has been a large net outflow of funds on the chain, indicating that their growth may rely on short-term incentives and lack long-term trust in capital. XRP's price surge was driven primarily by retail enthusiasm, with its low price attracting a large number of transactions. This enthusiasm quickly attracted scams using deepfake technology, impersonating its CEO to conduct airdrop fraud. This reminds investors that when a rally is driven entirely by emotions, the risks also rise sharply. In summary, with the regulatory framework becoming increasingly clear, the crypto market is entering a new stage of greater maturity and differentiation. The era of rising tides lift all boats and all coins rising together may be coming to an end. We are witnessing a market differentiation. The moat of institutional-level assets, Bitcoin, Ethereum, is deepening, while the altcoin market is a survival of the fittest, and fundamentals have become crucial. For investors, this means that future success will depend on the ability to deeply analyze capital flows and on-chain data, rather than just focusing on K-line technical indicators. That's all for today. Thank you for your company.